Welcome back. You're watching BioCell. Let me bring in quickly our experts on the mutual fund and alternative investment strategy. We have Vishwajit Parashar, Senior Vice President, Bajaj Capital with us. Jayant Pai as well, VP and CFP, Parag Parekh. Gentlemen, apologies to having to make you wait. Let me quickly rush in and bring in our first query. Jagdish has written to us right now. He has a mix of interesting funds with him. HDFC Equity Fund, Reliance Growth Fund, Sundaram Select, DSP BlackRock, HDFC Top 200, Fidelity Equity Fund. So most of these are top quartile funds. Let me bring in Vishwajit first. Vishwajit, what do you make of this portfolio?
Yeah, first of all, I think since he is taking the SIP as a strategy, which is a very good strategy in these kind of volatile times, so he should not be worried about if the funds are not performing as per his expectations. And obviously, when you are investing in SIP, you should have a long-term horizon. So let's say 3 to 4 years. I think all these funds which are top quartile funds, as you have mentioned, should give decent returns. But I think he is little overexposed to mid-cap, which is, as per my advice, I think he should, out of 100 rupees, let's say 30 to 40 rupees should be in large cap, another 30 rupees in flexi cap, or another 20 in value sell, and rest 10 or 15% should be in mid cap. So I think he can reduce his exposure, and as per the ratio which I have mentioned, he can bring more exposure to large cap like ICICI Prudential Focus Blue Chip or Franklin India Blue Chip, and also in a value style or flexi cap like HDFC Equity, which is already invested in. So HDFC Top 200 is also, which is a very good scheme. So you can add a little bit more flexi cap and more of large cap. So that will make a good balanced portfolio for him.
Jayant, what about you? What's your opinion?
Yeah, Jagdish has a set of very decent funds, but unfortunately they do not gel together. For instance, there is too much of an overlap. He has several large to mid cap funds and no large cap fund at all in his portfolio. So what I suggest is first he streamline his portfolio by reducing the number of funds and also increasing the variety in terms of the market cap spectrum. So what I suggest is he could add a new fund, HDFC Sensex Plus, which is a pure large cap fund, and he could fund this, that is around 4,000 a month. If he begins an SIP in this, he could fund it by stopping his SIPs in Birla Frontline Equity and Sundaram Mid Cap Fund. He could retain his Fidelity Equity holding, which it's a good fund, and HDFC Equity he could add. He is currently doing around $1,000. He could increase it to 3,000 by stopping the SIP in HDFC Top 200. So he could merge the HDFC Top 200 and equity SIPs together. And regarding the mid cap side of it, he could retain his holding in DSP Micro Cap and invest 3,000 per month in that. And he could switch from Reliance Growth into this fund, because Reliance Growth is an underperformer for too long a time.
All right. Let me quickly bring in our next query. Meena has written to us. She has 3 funds: HDFC Prudence, Birla Sun Life 95 and Reliance Growth Fund. Jayant, first your opinion. What's the view? Should she maintain these funds or maybe exit out?
I think she need not have 2 balanced funds in her portfolio. Both these balanced funds are decent ones, but you could just add a bit of variety by adding one large cap fund. So she could replace the Birla Sun Life 95 SIP with an SIP in a pure large cap fund, for example, say HDFC Sensex Plus or a Franklin Blue Chip. Reliance Growth also, as I mentioned earlier, is an underperformer, and she could replace this with HDFC Mid Cap Opportunities or IDFC Sterling Equity. Any of these funds are good ones. HDFC Prudence is a slightly aggressive balanced fund, but I guess she could continue her investments in that.
Vishwi, what about you?
I think if you really see these 3 funds, these are 2 balanced funds. So if it is only 2 balanced funds, then it is slightly not very apt. She can consider, I think, large cap and flexi cap funds. But these 2 balanced funds, as such, they are performing well. These are high equity exposure funds. 75% almost is in equity, and rest remaining 30% in high quality long term debentures. So as such, these funds are good. She can continue with it. But my only issue is, if she want to make a balanced portfolio, she should have more of large cap. And as rightly said, Reliance Growth Fund is not performing as per the expectation. So she can skip to other balanced funds or mid cap funds like HDFC Equity Opportunities or IDFC Sterling Equity Fund. So that should be my take.
All right, gentlemen, we'll have to wrap it up at that. Thank you so much for your time. Great chatting with you, but apologies for having to make you wait and limited discussion. We'll see you next week as well. Have a great weekend. All right, before I wrap this up, let me quickly remind all our viewers that the hunt for India's stock market